Good morning, traders. It is Tuesday, April 21st, 2015, 8:03 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quick rundown of the news. This morning we had strong large cap earnings in Europe. SAP and so on opened the market strong this morning, and then immediately, or a little bit into the session, the German April zoo survey missed for the first time since October of 2014, with the current situation survey improving for the sixth straight month, highest since July 2011. But the survey survey expectation fell for the first time in 6 months. So a nice little push up on the open of the European markets, and then a drop back into yesterday's range for a short period of time. Now we're back out. ECB sources suggest concerns over Greece and that the ELA haircut may be raised. Has subsequently weighed on Greek asset classes. Rumors that ECB may reduce their support for Greek banks. That's important. Keep an eye on it. Friday's big day. Greece and Spain are going to be discussed. Earnings this morning. DuPont announces $1.34 versus $1.32, $9.37 billion in earnings, a little bit less than expected, $9.6. Lockheed Martin, $2.74 in earnings versus $2.48, $10.1 billion in revenue versus $10.2 estimated. Verizon comes in at $1.02 versus 95 cents, $32 billion versus 32.3. So there's a theme here. Revenue's lower. Earnings are higher. The Hungarian Central Bank cut its base rate by 15 basis points to 1.8% as expected this morning. And also China, got to keep an eye on China. China did not inject any liquidity into their market today for the first time in quite a few sessions. And then finally, Baker Hughes, which is the company that makes the hardware for the energy industry, and who puts out the Baker Hughes rig count, comes in at negative 7 cents on Q1, negative 7 cents on Q1 versus 51 cents positive expected. Revenues of $4.59 billion versus $5.31 billion, taking a hit on the back of the drop in crude oil and the shutdown of many fields. Looking ahead, we don't have any numbers throughout this session. At 3:35 Central, that's 20 minutes after the pit closes, we have API crude inventories expecting 2.6 million, or not expecting 2.6 million. Last week we had 2.6 million. And then at 11:30 today, we have ECB's Nui, who is the president of the Supervisory Council, will be speaking in Geneva. So that's it for the news. Let's take a look at what we did yesterday, what the market's trying to do. Some of you may have listened in on the weekly update that I do on daytradingradio.com, and I talked about this gap up, 2 days of balance. We went up to 2105.50, so we have a descending trend line down here. We have an ascending trend line down from below, and it makes a triangle. We bounced for 2 days, then we gapped down. So we had somewhat of a weak structure because of the gap on auctioned area here, and the expectation was for it to roll over and test that at some point. It could not do that. On Thursday, it got fairly close. It pulled back to 92.75 versus the high of 92. And then what happened Fridays, we gapped down through it. We pushed right through to the outside of this value area for this composite. We pushed right against it. And then yesterday, again, we opened, pushed up to the MCV POC, and have pulled back. We have basically we're struggling, the market's struggling to take back this upper HVN, high volume node. If you've lost me with all these acronyms, just go to futurestrader71.com/glossary and you'll see what these acronyms are. HVN is a high volume node, LVN is a low volume node. It's a price or set of prices that have very little volume historically in them, or in the current or last session. So what we've done here, we've gapped up again through this thin zone that we sold off on Friday without testing. Yesterday's hypothesis, which was pre-recorded, I made the video very early at about 7:15 or so. The expectation is that the normal course of action for an auction, or the expected course of action for an auction, is for it to actually retest the part that is untested. And the reason we expect that is because if it's untested and I wanted to buy, I would not have as much of an incentive to buy until the market actually pushes down and shows me that there's a good base in this volume down here. So the expectation was for it to roll over and push down to 2080 or 2078, responsive selling on the open. That was the primary hypothesis, and then I expected it to turn around and push through to 2089.5 and then see resistance in approximately in the 9250, 9275 area. And I believe that had it gotten some responsive selling, 9275 would have shown much more resistance than what we saw yesterday. 9275 being an MC, LVN, CLVN, the low of these two balance days. We had some confluence there, but we did not see any resistance there. Yesterday's opening swing highs at 91 before it pulled back just a tad before it exploded through and pushed to 94.25. So interesting action there. What that told me, given that the primary hypothesis was wrong, the secondary hypothesis was for it to not be able to push lower and for it to push upwards and out of the prior day's range. On Friday, we essentially tested this extremely high volume node for this balance zone down here and rejected it in the overnight session. So the expectation was for us to get back up here and test this 2105.50 area within the next session or two. And it did that last night. It pushed to 2105.25, missed it by a tick, which is pretty good for the business that we're in. But overall, we don't have the kind of structure I'd like to see for a solid move up through 2107 and 2110 to finally get to our next target, which was 2120 and 2123. Overall, it was a very, very balanced market. But having the hypothesis be wrong yesterday is not as bad as it sounds. Having a wrong hypothesis means that there's a higher time frame acting on the market, and that's what we saw. We saw an intermediate time frame player come in and push right from the start. So we had an open, and then it tried to push lower, rejected, reversed. I didn't see any driving action. It didn't seem like a drive, just based on the way it was trading, the delta, and the way the market was printing on the offer. So when we have a higher time frame, the higher time frame does not care about yesterday's levels or the levels from 2 days ago. Higher time frames operate in much wider ranges, and the higher time frame, or the OTF, is the catalyst behind trending days or big moves. It's not day traders that initiate or control movement. We just respond to movement. So we pushed through. We could not get to the 2098.50 naked point of control. And in fact, when we look at the two-day composite, these are two balance days, so they should have an MC around them. When we look at the 2-day composite, we're at 2100, and that's the next target. That was the Fed day high, 2099.75, and we have a gap at 2175, and now we are through it on the overnight session. So given the overnight session right now, looks like I'm not going to have time to cover the topic I wanted to. When we look at the overnight session overall, pulled back to the mid, a test below, and it's holding. This looks like there's an impulsive move here. It looks like it is not complete. I don't see a gradual shut off at the high. There's a high probability of this high being tested early on. Overnight inventory is long, is likely to be long, so we may see some selling on the open, but it's, out of the last 20 days, we see selling on the open maybe 4 or 5 days out of those 20. So the market's really fighting, especially at lower levels. The market's really fighting to buy at the open, and that's what I expect. So there's a chance here, because the inventory is long, there's a chance that it may rebalance on the open, and it could roll over back into 97.50. But overall, I'm looking for 21.50 to be taken out today. That's the primary hypothesis. I won't cover the other markets. Not much has happened. Real quick, FESX back in its MC balance, just as expected, and has bounced off on pretty good earnings. And crude oil balanced against the low volume node here, which was the next target. Balanced against the low volume node. It's building overall. It is building it's building kurtosis. It's building some volume here, and it's balanced to the point where there's a lot of energy, no pun intended. There's a lot of energy for the next move. This is what markets do. They flag before the next move, and the more volume that trades, the more one party or the other is going to be wrong and will help make the push. So the topic I wanted to cover real quick, if I don't get cut off, is I think I have a few minutes, is the fact that most people do well. Most people do well on their sim account, and then it all goes to hell on live. This is the case for traders that I watch the risk for at Stage 5 Trading, and it was so for prop traders as well, as they learn the platform. They're on sim for about a few weeks. We don't want to extend the amount of time they're on sim. We want to get to the real market and perform a real deliberate practice on the real market. And the key element here is to trust in the numbers that your plan generates. If you take 2-3 losses in a row, that places some significant doubt on the plan. So don't focus on the goal. Focusing on the goal, having a goal, knowing what your expectancy is. And here's the formula for expectancy. There are two different expectancy types. Expected value, which is the expectancy I use, which is an average. Basically, this tells me on every trade that you take with my funds, what should I expect as a return. But we break it, it's an average, but we break it down into wins and losses because we want to see the components and how those components are moving. And then, of course, there's the risk-adjusted expectancy, which Van Tharp covers, expressed in terms of risk, 1R, 2R, 3R, 1.5R, whatever. Know what that is, set a goal for what it should be, but the next step, the significant step, is what system will you use? What system will you use to get there? That's the more important thing. So setting the goal is maybe 25% of the exercise. But what method are you going to use to achieve that goal? So you have to create a system of coming in and doing the same thing over and over and over. And first you have to trust in the system. So you set the goal, you have to trust in the system, and then hopefully the results start showing up by following the system. Most traders, when it comes to execution, as far as my experience has been, most traders do not trust the system. So they have not practiced the system enough because they change it all the time. So find a system of approaching the market. And by system, I don't mean a trading system, but how you approach the market. Anyway, I'm about to get cut. Good luck. and I'll catch you tomorrow.